Welcome to Real Vision's Trade Ideas. Today we're sitting down with Howard Penney of Hedgeye. Great to have you here.
Thank you.
So let's talk about a stock you're really well known for, Chipotle. I want to give a little bit of a recap. You were bearish on Chipotle in 2015 and 2016. Then you flipped a switch and went bullish in late 2017, and you were dead right on both accounts, which was a really awesome call. Can you walk us through your short thesis and then what happened and what changed in late 2017?
So back when we went short, they were claiming that they were able to do things that they actually weren't doing in their stores. So, for example, they said they were the first non-GMO restaurant company in the country, which wasn't true. I mean, there were GMOs all over the place. So they were putting forth this proposition to the consumer that just was inaccurate. And as it turned out, because they were trying to serve food, they were taking a big risk because their supply chain was not properly set up to serve the kind of food that they were serving, and they were growing so fast that they ultimately committed the number one mistake in the restaurant industry, and that's don't get your customers sick. And they were in denial of what happened and the impact on the business. But it also got worse because they didn't acknowledge the problem that they had, and they weren't properly prepared to take on an event that happened to them from a PR standpoint. So, and this really leads to the biggest problem the company had, and that was the CEO at the time. While he was a visionary to a certain degree in creating Chipotle, the company that we know today, he was an entrepreneur, and he probably should have stepped down a year before or 2 years before because he didn't have the skill set to be able to manage the company where it is today. And that's obvious because you see Brian Niccol, who's the current CEO, and how well he's running the company today. So, and I had said all along as the stock was going down, it's never going to be fixed until the CEO leaves, Steve Ells leaves. Steve Ells left the next day. I said, you got to buy the stock. Because it's a great company, it's a great brand, they have a good consumer proposition. They just need somebody to run it. And they got Brian Niccol, who is, a rock star, if you will, in the restaurant industry, and he's just done some amazing things.
So you're mostly bullish on the name specifically because of the CEO?
Yes, because there's so much potential at the company, right? In terms of the unit growth, the margin profile of the company, the recovery in same-store sales. It's hard to find a company that was as poorly run as Chipotle was, right? And as an opportunity in the restaurant space. Now, the stock at 600, it's reflecting a lot of good news, right? Mm-hmm. And it's starting to manifest itself. The good news is starting to manifest itself as the last quarter, where there was traffic growth was 2%, which in an industry where traffic is declining, that's an extraordinary performance. So it's gone from the worst run company to now probably one of the best run companies in the restaurant space.
What are some other factors that make you really bullish on Chipotle?
So if you think about the company, round numbers, will earn something like $10 or $11 this year, 2019. The potential is $25. Or something thereabouts. And then the biggest question that I ask myself is, prior to the outbreak of the foodborne illness, the company did average unit volumes of $2.5 million. They've increased the capacity of the store. So when you walk in Chipotle, you walk in, you get the line, you can get your burritos, right? There's another line in the back of the house, right, where they can make digital orders. Mm. So if they can do $2.5 million with one line, food preparation line, what can they do with two? Certainly more than $2.5 million. So what if they do $3 million? So as you see the recovery in sales going from $2 million today to $2.5 million to $3 million, and the leverage that provides the company in terms of earnings growth and margins, then that $10, $11, $12 earnings number is going to be $25 or $30 in the next couple of years.
So still a lot of potential growth left.
Yeah, now the stock is reflecting some of that, right? But it doesn't reflect the full recovery yet. And this is one of the names where I say you buy it on red, right? Because it's when names like this, you don't want to chase it, but when there are down days, you want to buy it because of that recovery in earnings and sales, it's going to go on for the next couple of years.
And a PE in the 40s or 50s doesn't bother you too much.
It was actually even more expensive, I think, when it was $300.
Yeah. Right?
Because they hadn't seen they weren't earning anything, right? So valuation's important, but it's certainly not a catalyst to buy or sell a stock.
And in terms of supply chain issues, you see that as pretty much behind them now.
Yeah. We have a professional management team running the company today. So they're not taking risks, right? So they're not taking risks with the type of food they're serving, with the lettuce, the tomatoes, the green onions, all those things that may have caused the foodborne illnesses. They've changed their process and procedure, so that shouldn't happen again. Now, will somebody probably get sick at Chipotle? Yeah. I mean, it happens all the time, right? And it may not be because of green onions, and it may not be because of salmonella or one of the other issues that you've seen. But are you going to read about someone, getting sick after eating Chipotle? Sure. You read about McDonald's, Burger King, Wendy's. I mean, it happens all the time.
Right. So I guess the headlines that are related to Chipotle sometimes stick out more because of what happened, though. So then what do you see as the potential upside for the stock?
Well, I have this vision of $1,000, frankly, but I can't quite get there yet. I think 700 is probably after next quarter, with the trends that we saw in the fourth quarter continue in the first quarter, and I think they are, then it'll probably get up to $700. But I think, in the next 2 to 3 years, I think $1,000 is probably the real potential.
And you see this well outperforming its peers in the restaurant space?
Yeah, especially for the next year. I mean, they just have, get back to this so poorly managed concept, right? So they spend 3.5% of sales on advertising, and they were getting zero return for that money spent because it was just so poorly conceived, the advertising and the promotions they were doing. Now it's a much better concept in terms of how they're pitching the brand and what they're doing with the brand, that they're actually getting a return on the money they're spending. And that really just started to unfold this past quarter. So you have at least 4 more quarters or 3 more quarters of accelerating momentum based on literally just the advertising alone. And then you have the digital piece, which every time an order comes in, if you were to pick up your phone and order Chipotle and then go pick it up, that's a higher margin transaction than if you were to go to the store and go through the line. So as the digital piece grows, and it could be 30, 40% of the business at some point, that's a tailwind to the margins.
More broadly, how do you see the restaurant industry overall performing in the next few years?
Pretty bearish on it, actually.
Okay, so this is completely different.
Yeah, I don't have many longs in the space. My longs are delivery focused companies like Grubhub and Just Eats and Waiter, because that's where the big growth is coming from the industry, and that actually penalizes the operators. So if you think about paying 15 to 20% for a transaction to an aggregator, a Grubhub, to get a meal delivered, and you're a restaurant operator with thin margins, it's not helpful. And especially and this is not so much for Chipotle and some of the other fast casual guys, but if you're a sit-down restaurant and your business model is built on people coming and sit down and having a meal and drink and having fun, and they're taking everything to go, that's a problem.
Right.
Especially because they're not drinking.
But actually, even with Chipotle, there is delivery. They partnered with Postmates.
Yeah.
Do you see that being a positive or negative for the company?
Right now it's a positive, right? And we're just going to have to wait and see how big that becomes. But there's the issue for Chipotle is no different than anybody else with delivery in terms of the fees, and that's a headwind. But there are more tailwinds than headwinds. Mm-hmm. So for right now, it's a positive. But if it becomes too big part of the business and it hurt margins, then it'll ultimately cause problems. But for right now, it's not an issue.
Great. So there are more positives than negatives for Chipotle.
Yes.
All right, Howard, thank you so much.
Thank you.
So Howard is bullish on Chipotle. Specifically, he suggests buying CMG on any pullback. He thinks the stock has potential upside of $1,000 over the next 2 to 3 years. Just remember that this is a trade idea and not investment advice. You should do your own research, consider your risk tolerance, and invest accordingly. For Real Vision, I'm Justine Underhill.